Okay. Let's start. Okay, today what topic should we talk about? Okay, okay, today, okay, we want, I think, okay, today I want to talk about the topic, uh, your journey to the super rich, how to be super rich, and and many people thought that they have to do extraordinary things to be super rich, but today I'm going to uh, help you to see in the perspective a little bit different because in fact in real life in real life uh, unless you want to get rich quick, okay, very quick, or else it is enough in your lifetime it's enough for you to actually to be very rich without doing something extraordinary. You just need to avoid some disasters or catastrophe to your wealth. Okay, for example, a lot of theory cannot be quantified, but I'm going to try in a way to enlighten you in a way that it can be it can be quantified. Something can be quantified. For example, um, if you were to, I always say, if you were to uh, lost 10% of your wealth. Okay, later I will talk about the what we can cause the losses of your wealth. But if you were to lose 10% of your wealth, um, you have to gain back. Okay, for example, $1 million, 10% is 100,000. If you need to gain back 11% or more. Okay, more than 11%. In order to just to recoup your losses, recover your losses. If you were to lose 20% of your wealth, you need to gain back at least 25%. It just to break even, to recover your losses. Okay, I haven't talked about winning, just to recover losses. Uh, that means if you, from $1 million, if you were to lose 200,000, from 800,000 you have to gain back 25% at least in just to break even or recover your losses. If you were to lose 50% of your wealth, okay, from $1 million, okay, you lost 500,000. From 500,000, now you left 500,000 balance, right? You need to gain back at least 100% just to recover, okay, to recoup your wealth. So it's easier to lose, uh, not easy to go up, okay, not easy to grow, not easy to recover, okay. So that is why you should investment, risk management is very important. You need to take care of your risk. uh, you need to know how to reduce your risk or minimize your risk. Okay, and what is the potential things that can cause you to lose your money, okay, your wealth, your money, okay. Okay, well, even you do nothing at all, okay, do nothing, there's still risk because the global capital market, the worth the worst money, is growing at a rate of at least 10%, 9.95%. Okay, on average per annum. So even if you were to do nothing, you are actually even if you were to do nothing and your wealth doesn't grow at all, $1 million, you will lose 10% each and every year. Okay, on, on average, on average, okay, on average. So okay, and there are other things that can potentially cause you to lose your wealth. Okay, in investment, in trading, in doing business, or even in our career. When we personally commit our time, our effort into it, we become very attached to it. So is internal, our our feelings, our emotions, and um, in investment, we always say greed and fear. Okay, greed and fear is our biggest enemy. Okay, it can cause us to lose our wealth, um, and our time. Okay, as time goes by, as as uh, as a person age. Okay, so uh, for example, as a youngsters, when I was I was very young. Okay, when I was very young, I used to work 10 to 13 hours per day. Okay, and sleep about 2 to 3 hours per day, average 3 hours per day, and it's harder to do that. Okay, it's not sustainable. It's harder to do that when you get older and older. So actually, in terms of putting in your time and effort in making money, it will become you will lose out to the youngster. Okay, so time is limited. Okay, 24 hours per day. There's no matter how rich you are, how poor you are, it's the same. Okay, and another thing is external factor, like your environment also will affect you as well, in your affect your judgment in investment, your environment. Okay, and other things, for example, more obvious one is the where you park your money is very important. There are a lot of scam, like the more well-known one is the Madoff scam. Okay, Madoff scam, they on average they pay out 10%, around 10% per annum, and it lasts more than 10 years. Only people find that they are scam. Okay, is a lot of people, well-known people, rich people, um, rich institutions, university, they put money into it. Okay, and there are some platform that not a scam, but it turned out very risky. They use very high leverage. Even banks can collapse. Okay, uh, like more recent one will be Silicon Valley Bank. 10 years, more than 10 years, 15 years ago is the Lehman Brothers. um, Once the fourth largest investment bank in US, um, and borrowing bank more than 200 years. Lehman Brothers is more than 550 years. Um, uh, of course, Citigroup, AIG, and recently Credit Suisse. Okay, high leverage, can cause them bankrupt, if not because of government rescue, or yeah, or government interfere. Okay, it also might collapse. Okay, so where you park your money is very important. Okay, these are more well known and bigger and uh, with longer history one. Okay, a lot of countries, they don't even have 100 years of history, by the way, like Malaysia, Singapore. So there are a lot of, not to mention, a lot of people actually they park their money in newer platforms. Okay, there are thousands of platforms. Of course, some of them uh, are currently very strong. Okay, but we don't know. We don't know because uh, big company like Nokia, once very big, also can go down. Okay, so things might change from time to time. The platform where you park your money. Okay, so how to and liquidity also have an issue. If let's say, for example, the platform where you park your money have liquidity problem, you might not be able to withdraw your money. So if let's say, for example, the investment the company, the stock that you buy, if they have liquidity problem, you might not be able to liquidate your positions. Okay. Um, so and also market, okay, market also have risk. Okay, and how to mitigate all these risks, how to minimize all these risks. Okay, one way is for you to diversify your markets. Okay, diversify your investment, diversify your platform that you park your money. Okay, and dive of course, more advanced one, you might want to diversify your timing. Okay, your timing to invest. And of course there are other way and diversify to the risk to the markets, to more people. Okay, so risk um risk also is there because nowadays the whole world is driven by the world financial market is driven by debt. Okay, high leverage, very high leverage. So even no matter where you park your money, there's risk because um, world government, they keep printing money, more and more debt, they just postpone the problem. That one is a big topic. But you come down to financial institutions, banks, and the smaller institution platforms, investment platform, trading platform is the same. Okay, high leverage. So there's potential risk there. Okay, so it's very important for you to diversify enough. Okay, and how to turn after you diversify enough to whatever I mentioned just now. Okay, platform, markets, timing. Of course, to you can diversify to markets and and investments. You can even turn this in the this all these risks or leverage or that all these potential risks into potential uh, potential winnings. Okay, in that means they not only you can minimize risk, you can even turn this all these, okay, potential risk into winnings. Okay, by using uh, some mechanisms in the market, for example the leverage. Okay, but now the problem is only how to use it safer, in a safer way. Okay, safer way. uh, you can leverage on technology. Okay, not nowadays, for the past 10 years, technological advancement helps you a lot if you know how to use them. Okay, it can help you to grow multi-million dollar or billion dollar. Okay, given enough time. So, and also the compound interest. Okay, if you can do it consistently, growing your money, compound interest will helps. Okay, just now I mentioned about timing, right? Diversify in terms of timing. Okay, a lot of investment strategy or investment, uh, very hard to quantify. People just use gut feeling. Okay, gut feeling to invest. However, using the technology today, the quant AI we are using, for example, we are able to quantify each and every market, each and every investment before we even put in our hard-earned money. So I suggest you also leverage on technology as well to help you to grow faster, grow your experience faster, and so that you are more informed in making informed decisions, and inform about the risk and ROI, the returns, before you even put in your money. Okay, rather than use your precious time and hard money to test the market. Okay, I suggest you can leverage on technology to test to to test the past data. Okay, so that you can gain more insights. Okay, and make more uh, informed decisions. And all this can be applied in different markets. Just now I talk about diversify to different markets, right? So different markets such as for example, US stock market, S&P 500, Dow Jones Index, Nasdaq, you can S&P 500, for example, okay, and you can diversify, for example, gold market, okay, gold and silver, and also Bitcoin, crypto, okay, that is also maybe part, maybe one of the uh, investment vehicle if you want to consider, okay, crude oil, okay, and different stock markets, different country stock market. Okay, this one in terms of market, okay, diversify in terms of platform. There are thousands of platforms here. Here I won't be able to. I won't want to name any platforms. And if you are keen on knowing uh, how to customize a strategy, okay, to diversify in different platforms, different markets, and different timing, you may contact us, okay, contact us, the link down below, or the up there, okay, around it, around this video, okay, whatsapp.maximalvalue.com, our support at maximalvalue.com. You also can engage a one-on-one call with us to talk talk in details, okay, discuss in details on how to turn minimize the risk. At the same time, you can even turn this into an opportunity to grow your portfolio massively. Okay, for example, if we were to quantify using the quant AI I mentioned just now, what we are using, okay, you no longer need to gamble, or no longer need to guess, no longer need to rely on luck, okay, you know exactly your risk and profit, okay, profit and risk before you even enter. Of course, things might change, okay, things might change, but at least it will give you a very some certainty there, okay, so before you even go in, rather than using gut feeling. Okay, and just now I also talk about diversify in terms of timing, right? Timing, for example, here there's a case study I always mention to our member, okay, for example, you uh for example, now if let's say you have some money, okay, some money, then you can diversify into, for example, 10 portions, 10 portions, okay, you 10 portions, you, for example, uh, uh, you can start with very small money, okay, you can even, if you want faster, of course, you can start with bigger money, it gives you some advantage, but I because this I cater for all, right, now I'm trying to help everyone, so let's give an example, $100, okay, it can be 100,000, it can be $1 million, it can be $10,000, it can be $1,000. I just kickstart a very with very small amount of money, okay, let's say $200, $200, okay, $200. If let's say I were to if we were to strategize and invest in gold market, okay, short term, um, you can say short term trading, okay, short term trading, for example, short term strategy, okay, the first cycle, for example, you make some money, okay, for example, $200, $268, then you can withdraw some money, for example, $68, and second cycle you do the same thing again, okay, okay, third cycle you do the same thing again. By the third cycle you should be able to break even. Why? Because the money that you withdraw already more than the money that you put in, okay, by the third cycle, and then you continue to do this. Once, if you were to successfully go to the 13th cycle, for example, it will grow to how much? Okay, it will grow to at least 4 million plus, okay, 4 million plus. This is just one case study, just one example. There are many strategy and many examples, okay. And of course, just now I also mentioned diversify in terms of investment, right? Of course, different investment vehicle they have different risks by default, okay. Usually government treasury or bond, it will have lower risk, than stock market. But if you were to look at longer term, then of course it's not the case, because longer term, if you were to look at very longer term, look at the intrinsic value of the company, or intrinsic value of the investment vehicle, the investment. So, and you enter at very good price, so it will also highly reduce your risk. Okay, highly reduce your risk. But by default, again, by default, generally speaking, fixed income vehicle will have lower risk than variable income vehicle. So variable income also have different category. Okay, like for example, mutual funds, stocks, and some other derivative. Okay, so if you are keen on knowing how to leverage on all these vehicles, also you can talk to us. Okay, you can either talk to our support, uh, um, or set a one-on-one appointment with us to discuss further, to customize a strategy that suits you. Okay, because throughout the years I've been customizing thousands of strategies for different people, different clients, different members, different students. Okay, so uh, now I'm just giving you a general view. Okay, and in details, there are a lot of things you can diversify. Okay, diversify to minimize your risk, and you can turn this in an opportunity to make money proactively. Okay, this is more advanced strategy, more advanced strategy. Okay, the hedging, usually people use it to minimize risk or to reduce risk. Okay, but actually you can use hedging to proactively make money as well. Okay, hedging uh, strategy. Okay, and there are different strategy. Generally speaking, it can be um, the conservative strategy, moderate strategy, and a more aggressive strategy. And bear in mind, this is relative. This is not absolute. Okay, relative. There are thousands of different. If I were to go into deeper, there are thousands of strategies. So yeah, that you can use for different markets. Even for the same market, you can use different. There are many strategies as well for you to make money, to grow your wealth. Okay, but very important. Okay, in summary, first thing you have to know, no matter what kind of investment you go in, before that you need to know the risk. Okay, need to know the risk. um, it's better for you to quantify them rather than just know, yeah, I know the risk generally, but using gut feeling. But it's better for you to quantify. When you can quantify, it is more objective rather than subjective. And secondly, you can think of how to reduce the risk. Okay, so that you can sustain through uh, any adversity. Okay, in times to come. Okay, and your portfolio can consistently grow, and in long term you can uh, uh, you can even grow more proactively by using different all these strategy. Not only you can turn this risk, potential risk, into opportunity to make money in uptrend, downtrend, downtrend, in good market or bad market. Okay, both. Sounds a lot of people, they can only make money in uptrend. Okay, in when market is good, booming market, but they are in recession, they die. Okay, so um, but in fact you can proactively make money or and grow your wealth in both uptrend and downtrend, in both good market and bad market, in both booming market and recession. Okay, so yeah, here's my sharing for today. And yeah, so if you have any question you want to ask me, you can leave in the comment section. I try to answer you in the next live stream. Or yeah, you can talk to us. Okay, you can talk to our just click the link around this. Okay, the whatsapp.maximavalue.com, WhatsApp us, or support@maximavalue.com, email to us. You also can have one-on-one consultation call with us, okay, to if you want to discuss further, okay. uh, so if you, of course, we do have our master class from time to time. If you are in keen, also you can talk to our support, okay, they will guide you, okay. Of course, if you want to know, test out how to, yeah, how to quantify the risk, the profitability before you even go in, and you also can contact our support, okay. We see how we can help you with our technology, okay, with our expertise, with our experience or strategy, okay. So here's for today. I will see you again. Hopefully the next time we meet, you will have a better growth, and uh, and yeah, see you again. Thanks, bye.